negative expectancy of -0.807. The averages stacked means nothing across days. The method confuses time frame. Intraday mean reversion works. Swing trend following doesn't. The backtest is honest. Current live record shows it too. 54% win rate on intraday, but the swing positions open now will likely prove the pattern. We've got 3 calls live right now. The setup is selling pressure. Chainlink at 1134 with a target down to 11.04 that invalidates above 1153. Cardano is the counter move, up from 22.5 cents toward 23.25. That breaks below 22 cents. Both trades rest on order flow. Chainlink is 41% sell side, Cardano 53% buy side. Our record on this approach is 1 in 4 calls correct. The tape works when the imbalance holds. It stops working the moment the order flow flips.
Bitcoin's dominance just hit 59%. That's the highest concentration we've seen in years. It means capital is abandoning altcoins and rotating into the major. Ethereum's dropped to 11% of the total market cap.
But Natalie, the overall market lost 3.5% in 24 hours. Doesn't that suggest investors are rotating out entirely, not just into Bitcoin?
Fair point. The outflows matter more than the rebalance. But Bitcoin holding dominance while everything else bleeds tells you where confidence sits.
So altcoins absorbing the rest at 30%, is that a floor or capitulation?
It's a flaw. When dominance this high, it holds. The cash market has closed. All 3 indices are flat at the close. The S&P 500 at 7777, the Nasdaq at 29,311, and the Dow at 53,266. No movement to speak of. Energy markets are similarly static, with West Texas crude at 86.35 and Brent at 92.41.
Aaron, that's a striking absence of direction, given we're in earnings season. Are traders simply waiting for the Fed to signal next week? Or is there something else keeping money on the sidelines?
Natalie, it's the latter. Until we hear from Powell, positioning stays light. Nobody wants to be long or short into that uncertainty.
But gold is holding firm at 46.04. Doesn't that suggest some hedge demand is active?
It does. That's the only real story here. Safe haven demand persists while equities stall. We graded 20 calls this week. 4 winners, 12 losses, 4 that expired flat. That's a 25% hit rate. The last 6 resolved calls show Dogecoin and Ripple both worked. Chainlink and Bitcoin and Solana all failed. We are running 3 live calls right now.
Aaron, Natalie, here those 12 losses worry me more than the 4 wins. Are we seeing a pattern in what's breaking? Or is this just noise in the current market?
The losses cluster in directional calls on assets with thinner order flow. We are chasing moves on lower conviction setups. Chainlink's the exception. That's a legitimate miss on our read of sell-side pressure.
So you're saying the methodology is sound, but our entry timing on those thinner traded names is off. What's different about the 3 calls we have running now compared to what failed?
Cardano's got 53% buy-side order flow. Both Chainlink setups are targeting deeper moves on the same sell signal. We are testing conviction, not guessing.
The dollar and the 10-year are both holding steady, which means risk assets have no clear directional push right now. Equities are flat at the close. Precious metals are unchanged. Energy is sitting still. Without fresh movement in rates or currency, crypto lacks the macro tailwind it needs to break higher. The setup remains neutral until we see the dollar weaken or yields fall. That's when risk comes back on. Bitcoin's showing 6% selling pressure, while Ethereum is down 13%. That's divergence. When the 2 largest alts move in different directions like this, it tells us something about where smart money is rotating.
But Aaron, Solana and Ripple are both positive today, up in a market where Bitcoin's struggling. Are we really seeing capitulation in alts, or is this selective weakness in the mega caps?
Natalie, it's selective. The breadth matters less than the narrative. Bitcoin absorbs supply, Ethereum sheds it faster. That gap, the 6-point divergence, is real. Main matters next quarter.
So you're saying these aren't panic sellers, they are repositioning. What about the stables flowing into Solana and Doge? If capital's genuinely leaving Ethereum, why is it not showing up in Bitcoin?
Because Bitcoin's the reserve asset. Ethereum holders rotating out doesn't mean they are buying Bitcoin. They are sitting in cash or moving to layer 2s. The alt market disagreeing with Bitcoin isn't noise. It's the market pricing different risk profiles for different protocols.
Commodities are flat across the board, but the real story is underneath. Gold near 4,600, copper at 14,190, West Texas crude at 86.5. None of that moves without the dollar. When rates stay elevated, the dollar stays strong, and that crushes commodity prices because they're priced in dollars. It's not a supply problem. It's a monetary problem.
Aaron, but Brent crude is trading at 92.44, which is a meaningful $6 gap to West Texas. That spread usually tightens when the dollar weakens. Are you saying we shouldn't read that gap as a signal that rate expectations might be shifting?
The Brent spread reflects geopolitical premium, not rate expectations. That's noise. What matters is whether the Federal Reserve signals any shift in its inflation fight. Until that happens, the euro stays weak at 1.167, and commodity bulls stay on the sidelines. The metals market is telling you the same thing gold and silver aren't moving, because nobody believes inflation is coming back.
You're dismissing Natalie, but copper typically leads. If growth were about to roll over, we'd see copper break lower first. It hasn't. Doesn't that suggest the market's pricing in rate cuts sooner than you do?
Copper's flat because demand is flat. That's all. When the Fed actually cuts, commodities move. Until then, we're waiting. Retail positioning in Ethereum is heavily skewed toward longs at nearly 65%. That's a crowded trade. Compare that to Bitcoin sitting almost perfectly balanced at 52 long, 48 short. The difference matters because when positioning gets this one-sided, it leaves less room for newcomers to push prices higher.
But Natalie, XRP and Solana show even more extreme conviction, with 3/4 of traders holding longs. Doesn't that suggest genuine bullish momentum rather than dangerous crowding?
It suggests the opposite, Natalie. When that many people are already long, who's left to buy? The move has already happened. That's when reversals tend to bite.
Fair point. So for a retail investor holding Ethereum right now, the positioning alone is a red flag, regardless of what the technicals say.
Exactly. The price can keep rising, but your margin for safety just got narrower.
This is a breaking market alert. A $5.2 million Bitcoin buy just hit the market 7 seconds ago. 51 times the typical trade size. The print was absorbed immediately. We are running 26% hit rate on the crypto calls this cycle, and the tape tells you exactly why. Bitcoin and Solana both went the wrong way. We called down, they moved up. That's not noise, that's a breakdown in order flow. When your setup breaks, the market's telling you the money moved.
But Natalie, look at XRP and Doge. Those worked exactly as the flow predicted. Why are we throwing out a method that's batting 50% on the ones that actually resolve, rather than the expired positions?
Because expired isn't zero, Natalie. It's incomplete data. The three we have open right now link, ADA, AVAX, they're all under an hour old, and the order flow on AVAX is 63% sell side. That's conviction. That's where the stops are.
Agreed on the conviction reading, but ADA got 53% buy side, and it's only got 28 minutes left. Which one matters more to you, the strength of the flow or the time decay on the trade?
Time decay kills everything eventually. ADA is the real test. Order flow that's strong should hold.
Chainlink is down nearly 4% in 24 hours, the biggest loser on our watch list. That's meaningful weakness in an asset that tracks broader risk appetite. Solana and Dogecoin are holding slight gains, but Chainlink's drop tells you where conviction is softening.
Aaron, Chainlink did touch nearly $12 earlier in the session though. Are we seeing profit taking after a run, or is this structural selling tied to Oracle demand?
It's profit-taking, Natalie. Volume on the decline is light. What matters more is Dogecoin up 1.3% on no fundamental catalyst. That's pure momentum, and it's fragile.
So you're saying the strength is in the wrong places. Where should money actually be moving?
Into Bitcoin and Ethereum stability. They are barely down. That's your real signal. This is a breaking market alert. A $1.04 million Bitcoin buy just crossed at 77,200. That's 99 times the median print. The order absorbed immediately into the market. Equities are dead flat across the board, the S&P and Nasdaq both holding at yesterday's close, but that stillness is masking divergence where it matters. Gold is locked at 4,604, the yen holding firm at 159, the dollar steady. Crypto is the outlier now. When risk appetite flatlines and precious metals do nothing, you need to watch where money actually flows. That tells you what traders believe is coming.
But Aaron, if equities are truly flat and gold's offering no directional signal, isn't that itself the message that we are in a wait-and-see holding pattern? The euro at 1.17 hasn't moved either. What specifically in crypto divergence changes the investment thesis here?
Natalie, the flatness everywhere else is noise. The real question is whether crypto breaks from this. When the VIX and the dollar stay still, but digital assets move decisively, that's when conviction emerges. Right now they are testing whether this pause holds or whether risk-off triggers a broader reset.
So you're saying the crypto move, or the lack of it, becomes the leading indicator for what happens in equities and commodities next. That's a significant reversal from how we've traditionally read these markets.
Exactly. In this cycle, crypto is ahead of the curve. Watch it before you watch the indices. Bitcoin and Ethereum are both shedding open interest as prices hold. That's a squeeze pattern. Real money is leaving the table, not entering it. When price stays flat but contracts fall, you're watching leveraged positions unwind, not fresh capital flowing in.
But XRP moved the other direction. Aaron, open interest up 0.5% while the asset climbed. That looks like your new money scenario. Are we seeing a divergence between what's happening in the majors and the alts?
We are. XRP caught fresh positioning. Doge lost nearly 1/3 contracts though. That's the real story. The biggest plays are contracting.
So for someone holding through this, what does that mean? Less volatility ahead or more risk?
Less liquidity in those unwinding contracts means wider spreads. That's real cost. Natalie, the message is simple. The market is thinning out. This is a breaking market alert. A $348,000 Bitcoin sale just crossed at $77,246. 99 times the median print size. Hit the market 4 minutes ago, and it did not get absorbed. Ethereum long from 23.46, stop at 21.56.5, target 27.82. That's 8% risk for 18.5% reward, 1 to 2.3. The trend is up, with the averages stacked, and price is holding above the 200-day. Close through the stop, and the idea is dead.
That's a swing trade, so you're holding for days, but your intraday desk just went 1 for 3 on crypto in the last 6 sessions. How much confidence are you putting behind longer duration when the short-term sample is pointing the other way?
Natalie, the intraday sample is thin and noisy. Look at the backtest. Bitcoin intraday across 182 trades shows a 0.181 expectancy. That's barely above zero. The swing structure here is clean. Averages stacked, higher lows, price above key moving averages. That matters more than noise.
Fair point on the backtest, but you're also sitting with 2 open swing positions already. How much dry powder do you have left before position sizing becomes the real constraint?
We are running 4 open positions maximum. This is the third. Size is scaled accordingly. Risk per trade stays at 1% of capital. That discipline doesn't change. Bitcoin is absorbing by pressure $1.3 million in net buying against just over 1 million in sales. That's a 10% delta. But Ethereum is the real story. Natalie, it's pulling twice that ratio. Nearly 518,000 in net buys with over 23% delta. The alts are voting differently than Bitcoin here.
Ethereum is ahead, but look at the trade count. Bitcoin had 2136 trades to Ethereum's 2974. That's almost 50% more activity on Ethereum. So is the delta telling us conviction or just noise from smaller positions?
Conviction. The largest single Bitcoin print was $380,000. Ethereum's largest was smaller. When you see that kind of disciplined accumulation across nearly 3,000 trades, that's institutional patience, not retail churn.
Fair point, Aaron, but cumulative volume delta on Bitcoin is still 7.5 million against Ethereum at 5.4 million. Bitcoin's absolute cumulative volume delta is higher. Does the alt flow really disagree with Bitcoin, or are we watching the same institutions stage their entry differently?
They are staging it differently, which means the market structure disagrees. Bitcoin bought at spot. Ethereum is being accumulated through conviction trades. That divergence matters.
This is a breaking market alert. A $380,000 Bitcoin block just moved at 77,156. That's 99 times the median trade size. The print absorbed 3 minutes ago. The desk closed 26 graded trades with 54% hitting. That's an expectancy of 0.61 R per trade, which means money. But Natalie, the last call on Bitcoin expired worthless after 9 hours and 40 minutes. And before that, we took a 2% loss on Ethereum intraday. 2 trades that should not have been there.
The intraday Bitcoin backtest across 1,000 bars shows 33% accuracy but only 0.18 R expectancy, so those shorter timeframes are fighting you. Why are we taking intraday setups at all when both open swings on Bitcoin and Ethereum sit at 2.3 R reward for 3.5% and 8% risk, respectively?
Because intraday setups hit faster, and some traders need the rhythm. But you're right that the math says swing. The backtest on Bitcoin swing is catastrophic 2% hit rate, minus 0.86 R, so if we're doing swing, Ethereum is the only setup that works here.
So we're live on 2 swing trades that backtest clean, and we've poisoned the record with intraday noise. What changes the next time someone pitches an hourly Bitcoin move?
We say no. The data is there. We stop pretending conviction and time frame work together when they don't. That is where we leave it from Investor Academy. Nicholas Brooks is up next with America Decides. Good to be with you. America Decides starts now. Nicholas Brooks here, alongside Victor Bennett. And our focus this hour is policy, politics, and what they do to markets.
The cash market has closed. All 3 indices finished flat: the S&P 500 at 76.77, the Nasdaq at 29,311, and the Dow at 53,266. Commodities are quiet as well. Gold holding at 4,604, West Texas crude at 86.35.
Nicholas, flat closes across the board. Tell us something important. There's no conviction either way right now. But look at the euro. It's holding just under 1.17. That currency strength is a headwind for earnings when companies report, especially for multinationals. Are we pricing that in yet?
A fair point, Victor. The currency move does matter for forward guidance, but we're also seeing demand hold steady in energy despite the flatness. Natural gas finished at 2.8, suggesting no panic about winter demand.
Agreed on energy, but I'd push back on the bigger picture. 3 flat days in a row across equities usually precedes volatility, not calm. What's the market actually waiting for?
You're right to question the silence. We'll watch the open tomorrow for real volume. That's when we'll know if this is consolidation or indecision.
The tape is rising into resistance, but the record tells a different story. 20 graded trades resolved with just 1 in 3 hitting the target. That's the level that matters when directional conviction meets execution. We're seeing half the calls either flat or wrong, which means the setup is working against us more than for us.
Nicholas, you're looking at 20 resolved, but there are 3 open positions running right now. ADA and DOT are both long biased on buy-side order flow above 50%. Shouldn't we factor in that these were placed when the macro backdrop was different?
Fair point, Victor. The 3 open calls do shift the numerator, but the denominator problem remains. When you're 50-50 on closed trades, and the ones that do work only move 30 to 70 basis points, you're fighting friction costs.
The AVAX short is down into 63% sell-side order flow, with 21 minutes left. That one could flip the ratio. Are you saying the setup itself is invalidated, or just that this particular sequence hasn't performed?
The sequence. The tape stops being reliable when the resolution takes longer than the move. This is a breaking market alert. Bitcoin just absorbed $150,000 buy print at $77,213. That's 59 times the median trade size. The block moved 36 seconds ago. Commodities are flat across the board tonight. Gold holding at 4,600, silver at 69, copper unchanged. West Texas crude at 86, Brent at 92. The real story is the dollar. A stronger greenback makes commodities more expensive for overseas buyers, which should be capping prices. Instead, they are holding steady. That tells you the market is pricing in lower rates ahead.
Nicholas, the euro is sitting at 1.167. That's not a collapsing dollar, that's stability. If the market truly expected rate cuts, wouldn't we see gold already trading higher? Copper especially should be signaling growth optimism, and it's not moving at all.
Fair point, Victor. But copper flat is